I've got huge news for you. Fidelity is launching its own tokenized fund to compete with BlackRock. And Tether is about to get audited by a top 4 accounting firm. This is huge for the stablecoin market and as stablecoin legislations come through. And the SEC may rule on NFTs very soon, maybe as early this week, saying they are not securities. I'll give you the details. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, we're seeing some movements from Bitcoin. Today, it crossed over $86,000, so we continue to see some higher highs and higher lows forming here on the short-term time frame. Now, this is kind of a bit of a relief rally. We're not seeing any indication of a true breakout. We need more confirmation for that, right? Because the markets can fake us out. And look, Bitcoin could pump a bit. Maybe Bitcoin goes to 92K, then goes back down to retest the lows again, then have a true breakout. So these are scenarios you have to be prepared for, but it's good to see Bitcoin is moving in the right direction. We are slowly getting out of this hole we've been in. And overall, we're seeing this for the markets across the board. So you look at the NASDAQ, you look at the S&P 500, also seen a bit of the recovery, but we don't have full confirmation yet, but the signs are there and it's looking good. We know the bull market's not over, guys. If you look at different signals, even the time perspective, this bull market still has ways to go. And we are seeing some altcoins like XRP, their charts are looking good, setting up similar to Bitcoin where they're looking to break out as well. So I think the next move is coming as far as a strong bullish rally to new highs, but we need full confirmation. Like I said, the market can give us a relief rally, then go back and test the lows, but doesn't necessarily have to play out that way, but we have to be prepared for all scenarios as educated investors, right? We don't want to be emotional about these things. We want to look at the charts, understand the possible scenarios, and then position ourselves accordingly. Now, something that's a good sign, the liquidity around meme coins is drying up. In fact, Pump.Fund's daily revenue is down 96%. And I tweeted out about this. Beautiful. Send the liquidity back to Bitcoin and the real altcoins because the meme coins really sucked out a lot of liquidity. Even Trump's meme coin, which I am not a fan of, and you had Melania and so forth. I don't think any sitting president should do this. It doesn't matter if you're Democrat, Republican, independent, doesn't matter, right? But hey, it is what it is, but at least the liquidity is drying up there and it's going back to the real assets. So very good sign here. And the macro is setting up beautifully with global liquidity surging. And we know risk assets like Bitcoin and crypto in the stock market will catch up. So very good macro sign, guys. And the DXY is also breaking down. Many different analysts and traders are highlighting that the DXY, despite seeing a little bit of strength here, will continue to break down. It has been breaking down like crazy lately, which is a very good sign for risk assets. So the macro factors are there, guys. The stage is being set for the next bullish rally. I hope you understand what I'm saying. This is not an emotional take. This is based on the data and the charts. Now, guys, we got some interesting news coming out around the SEC and NFTs. So Sander Lutz, who is the senior writer at Decrypt, said SEC Commissioner Hester Peirce tells me NFTs could be the next crypto asset class the agency exempts from securities regulations via a statement, specifically types of NFTs used by companies to fundraise. Peirce mentioned Stoner Cats and Flyfish Club as the exact type of NFTs the SEC should carve out. Both projects raised millions via the sale of membership NFTs before the SEC sued the projects during the Biden administration. Now, we saw the SEC recently give clarity on crypto mining as well as meme coins, saying they're not securities activities. NFTs will be the next logical move here and an easy one for the agency. So guys, we are getting incredible clarity here from Hester Peirce, Mark Ueda, and Paul Atkins is not even in office yet. So guys, things are moving in the right direction. We have a pro-crypto government. So the setup in the macro with the government, the charts and everything is looking really good for the next rally and the continuation of the bull market. Now, interesting news coming out from Tether. Tether's CEO says a full audit by a Big Four firm is the top priority following the new CFO hire. So this is really great. We know Tether does their quarterly attestations. We know that Cantor Fitzgerald, a major Wall Street firm headed up by Howard Lutnick, who's now part of the Trump administration, has said Tether has the reserves. And if you guys recall, I discussed this with Tether CEO Paolo Ardoino last year. The interview was in March of 2024. If you haven't seen that, check it out. And he mentioned, the working relationship they have with Cantor and much more. But an audit from a top four accounting firm like your PwC, Deloitte's, and so on and so forth would be huge. And I think Tether is looking to do this because stablecoin legislation is coming here in the United States. Plus, they had some issues with the EU MiCA regulations. So I think Tether's going to get their house fully in order. I'm not saying it's in disarray, but they're going to get all their T's crossed and their I's dotted, and they'll be in compliance. So really big news. And I think these are things we need to see across the crypto industry: more audits, more transparency, and more of the neutral parties out there that can come in and make sure everything's in order. This way it's not biased or whatever it may be. So this is really great, guys. Huge news. And I expect other stablecoin players in the market to do this as well. Now, huge news coming out from Fidelity. Many of you know Fidelity is a powerhouse on Wall Street, guys, and maybe the second biggest name following BlackRock. Well, they are joining the tokenized asset race, guys. We know BlackRock already launched a fund called BUIDL on Ethereum. It recently crossed over $1 billion of AUM, which is incredible, and it hasn't been a year yet. So as we've been talking about, guys, the token economy, tokenization is the future of finance, as Larry Fink has said, and they're going to put everything on the blockchain, all the traditional assets, commodities, securities, stocks, and so forth. So let me give the details. Fidelity Investments has filed to register a blockchain-based version of its US dollar money market fund, joining the race for tokenized assets. The filing said the fund currently uses the Ethereum network and may expand to other blockchains, with the product expected to become effective on May 30th, pending regulatory approval. Fidelity, managing $5.8 trillion in assets, is the latest financial heavyweight entering the fast-growing tokenized U.S. Treasury space, which has grown over 500% over the past year. Guys, I hope you see what's happening here. These Wall Street firms are not playing around while retail is crying and scared, bull market's over, this and that, whatever. These institutional players are looking at the macro view, seeing what is coming, where we're headed, everything on the blockchain. The economy and government's running on blockchain, guys. Second takeaway: Ethereum continues to get adoption. Haters are going to hate, right? But this is real world adoption. And as I mentioned earlier, BlackRock is using Ethereum as well. Now, they're not only going to use Ethereum, they're going to expand to other blockchains as well, because it's going to be a multi-chain world. But Ethereum continues to get enterprise adoption. This is huge news if you're an ETH holder. Recently I told you guys I bought the dip for XRP, SWI, and ETH. So those were my bets, not financial advice. And I believe ETH is going to do really well. I've been saying that once staking gets added to the Ethereum ETFs, it's going to be a game changer. You're going to see a lot of inflows and the price will surge. Look, every dog has its day in this bull market, right? Liquidity flows through. The question is who will be the leaders and which ones will outperform which. So I think ETH is going to catch up and do well based on these different factors. Now, you're going to see people in the comment section. They'll probably be emotional. ETH sucks, this, that, whatever, but it's just an asset on a blockchain. You may not like the people behind it, Vitalik or whoever, but that's different from the asset and the technology, which these Wall Street folks, they're not emotional about it. They're just building and they see what's coming, guys. So I hope you do as well. So huge news here. Now, speaking of Ethereum, there's a report here that high throughput Ethereum scaler MegaETH debuts public testnet, hitting 20,000 TPS on day one, so transactions per second. So we continue to see there's different scaling solutions being built for Ethereum because it does have a scaling issue, but you have to look at the pros and cons. It has strong security. It has the smart contracts pedigree. So that's why a lot of enterprises build on it, despite maybe the fees and things like that, because the pros outweigh the cons. So MegaETH, the Ethereum scaling solution backed by notable investors, including Vitalik Buterin, launched its public testnet on Friday. The team takes an opinionated stance on scaling that runs counter to the roll-up centric roadmap that scales Ethereum through multiple layer twos. So many of you know there's a lot of layer twos out there that help Ethereum from a scaling standpoint. And a lot of builders have been doing this, right? Just look at Coinbase, they have Base, which is their layer two, but it doesn't have a token. But if Ethereum is able to improve natively on the L1, right, so to speak, that will be really great and it should boost adoption, guys. Now, a great place that you can buy Ethereum, Bitcoin, XRP, and other altcoins, guys, is on Uphold, which has 300 plus cryptocurrencies. They actually just re-added staking rewards for 19 cryptocurrencies. This is a platform I've been using since 2018. It's really easy to use. They are safe. They are fully reserved, guys. They don't commingle or lend out your crypto funds, and you can review their transparency report. They also have a great rewards program, which is amazing. You can earn up to 5.25% on stablecoins, and part of this rewards program, you get 24-hour early access to new tokens that they list. So in order to participate, you have to open the app once per month, deposit $50 once per month, and trade $50 once per month. And the stablecoins they support are Circle's USDC, Ripple's RLUSD, and PayPal's PYUSD. You get 5% on those, and you get 5.25% on USBC. So this is an amazing program. If you'd like to learn more, check out the link in the description. Now, continuing the news around Fidelity. So CSC registers Fidelity Solana Fund statutory trust in possible step towards an ETF filing. I know they use the word possible. Let me give you the outcome here. They will file for a Solana ETF. We see all of these Wall Street firms are in a race to get XRP, Solana ETFs. Some are doing Litecoin, some Dogecoin. So Fidelity is not going to get left behind, and the BlackRock is not going to get left behind as well. So CSC, Delaware Trust Company, registered a new statutory trust named Fidelity Solana Fund. A new filing shows a Fidelity spokesperson declined to give additional details on the filing. Several other asset managers, including VanEck, ProShares, Grayscale, and more, have filed applications for Solana ETFs in the past. Fidelity manages the second largest Bitcoin ETF by assets under management. So that's why I said earlier, right behind BlackRock, there's Fidelity, guys. So huge news when they make a move. Now, Han Ventures seeks $1 billion to fund crypto startups. Guys, I've been reporting news like this to you about funds, hedge funds, VCs launching new crypto investment focused funds where they invest in the companies building the infrastructure of the market as well as token projects, right? And you want to pay attention to this because these institutional investors, when they put money behind a token, it can do well. It's not the only factor, but if they're putting a lot of liquidity, it can do well. So this is why you want to include this as part of your research. So former DOJ prosecutor Katie Hahn's venture firm is raising $1 billion in fresh capital to invest in early and late stage blockchain startups. The firm previously raised $1.5 billion, which it largely deployed following the crypto market downturn in 2022. Couple of takeaways there. They already raised over $1 billion. They're raising another $1 billion. I mean, do you see what's happening? They're getting the money. The capital is coming in. Once again, as retail is crying, retail not looking at the macro, not paying attention. Now, I'm not talking specifically about you guys who are watching and listening because many of you are educated. Many of you have been here for a while. You've been doing the research, listening to the podcast, looking at the moves happening, right? We've been paying attention to the charts. We've been paying attention to the macro with M2 and so forth. But there's a lot of people not paying attention while this capital is coming in, it's being invested, and these players are looking to make money. They're not throwing $1 billion at different crypto projects to lose it, guys. And we want to be on the side of smart money. Now, second takeaway here, they deployed the $1.5 billion in the crypto market downturn in 2022. That was the bear market. They bought the blood on the streets. Are you getting what I've been saying for years? Is it sinking in? Is it resonating? Buy the lows, buy the fear, buy the blood on the street, right? You talk to Warren Buffett, he'll tell you the same thing. And sell the greed, sell the euphoria. Once you understand these things in the context of the markets and with the macro backdrop of M2 and DXY, and that's started a podcast telling you guys about that, it becomes a lot easier to invest. It becomes a lot easier to navigate the markets. I'm not saying it's going to be 100% easy, that there's not going to be turmoil like what we've been seeing recently, that the markets are not going to be a roller coaster ride. Once you see the macro view, you know how to navigate the waters, guys. So I hope that's helpful. Guys, that's the final news item. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. A great way you can support me and the podcast, guys, is by subscribing to my free email newsletter. It's 100% free. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital. And also check out my new course at mycryptocourse.com. This is a comprehensive course. You can expand your knowledge about this asset class and industry. Knowledge is power. What makes it unique, very different from any other course out there, it features expert commentary. You will hear from founders, CEOs, and innovators building in the industry. No other course offers this. And of course, it has full text write-ups, videos, and downloadable materials. And you pay a one-time fee, you get lifetime access, and you can go at your own pace. You can share the login with your friends and family if you want. And guys, you can view the full curriculum on the website. So get an idea of what's included. So if you'd like to learn more, guys, go to mycryptocourse.com. Link will be in the description. Thank you for watching and listening. I appreciate you all, and I'll talk to you all later.